Warren Buffett, who is he? Warren Buffett is an American business magnate, investor, and philanthropist. Warren Buffett is one of history's most successful investors and philanthropists. Warren Buffett has amassed his wealth by combining shrewd investment tactics, self-control, and a distinctive business philosophy. He presently serves as Berkshire Hathaway's chairman and CEO. Owing to his extraordinary performance in the stock market, he had a net worth of $121 billion as of September 2023, making him one of the richest person in the world. The renowned value investor Warren Buffett transformed a failing textile factory into the financial engine that propelled what would become the most prosperous holding company in history. Warren Buffett is regarded as one of the most successful investors in the annals of world finance. Many of Warren Buffett's devoted followers go to Omaha, Nebraska, every year just to hear him speak at Berkshire's annual meeting, which is sarcastically known as Woodstock for capitalists. He displayed a strong interest in business and finance. Warren Buffett began investing when he was just 11 years old, purchasing his first stock. At a cost of $38 a share, Warren Buffett bought 6 shares of City Service preferred stock, 3 for himself and 3 for his sister Doris. Warren chose to sell his shares after some time, during which the stock price rose by as much as $40, making a small profit. Throughout his childhood, Buffett traded stocks frequently, paying his trades with money he earned from various part-time employment. After graduating from high school, he had over $5,000 in savings, which he used to purchase a 40 hectares farm in Nebraska. He used his money to accomplish this. Leasing the land to a tenant brought in $200 in yearly income for the landowner. Buffett attended Columbia University to get a business degree. Harvard had turned him down, where he studied under the renowned value investor Benjamin Graham. Selling soft drinks, Warren's passion in generating income began at a young age. Benjamin Graham, the founder of value investing, was one of Buffett's professors at Columbia, where he also began the foundation of his illustrious career. And so, one of the most successful investors got their start. He established Buffett Associates after moving back to Omaha in 1956. He met Charlie Munger in 1959 and they teamed up when he was 30 years old and already a millionaire in 1962. In the end, their partnership led to the creation of an investment philosophy based on Buffett's idea of viewing value investing as more than just an effort to squeeze the last few dollars out of failing businesses. Buffett once said, "Finished reading The Intelligent Investor, and after that I didn't buy any more stocks. I acquired companies that were traded publicly, yet I still became a business owner and was unconcerned with a stock's performance. I didn't know what it would do the following day, or the following week, or the following month, or the following year. Although I had no idea what the stock market would do, I was certain that for a firm to succeed over the long haul, its employees needed to be passionate about what they do." Buffett holds that the secret to success in doing what you love is to identify your passion and persist with it. Even when the going gets rough, you'll be inspired to keep going. I've dedicated my entire life to my work because I'm a smart guy who is incredibly passionate about it. You don't need to be a genius. I have surrounded myself with individuals who bring out the best in me. More about how Warren Buffett became a billionaire. How he did acquire such a massive fortune. How did Warren Buffett get rich in his professional trajectory, as well as the defining moments that have significantly contributed to his extraordinary success. Then stay tuned to the video. Welcome to Warren Buffett Investment. Don't forget to subscribe to our channel and press the bell icon to see more about Warren Buffett Investment. Okay, let's begin. How did Warren Buffett become a billionaire? How does Warren Buffett recommend creating generational wealth? In Warren Buffett's instance, he genuinely went from selling newspapers to being one of the richest men in the world, and here's how he did it: invest. The rags to riches story might sound too wonderful to be true, but in Warren Buffett's case, he actually accomplished it. Warren Buffett, an investor rather than a founder, has increased his fortunes by more than 100 times merely by making prudent investments. Graham advocated value investing, which he defined as looking for stocks that were being sold at a significant discount to the value of the underlying assets, or what he referred to as the intrinsic value. Buffett understood the idea but wanted to take it a step farther. In 1962, when Buffett first purchased Berkshire Hathaway stock, the ailing textile business was challenged by low-cost competition. He purchased a controlling position in the company in 1965 after becoming intrigued by the stock's low cost when compared to its book value and net working capital. When Buffett purchased the shares, prices were around $8. By the time he was appointed CEO in the late 1960s, they had increased to around $20, Currently, Class A shares of Berkshire Hathaway sell for more over $550,000. Warren Buffett seldom ever sells his stock holdings. He essentially purchases them as soon as they begin to decline. Stocks of a firm with a lot of potential that he then forgets about, but after a decade or two, these stocks, like Coca-Cola or Apple, bring him millions of dollars. Having invested for years, he once disclosed that all he could advise others to do was to be patient with the stock market. Don't keep checking on something you've invested in every minute of the day. Simply let it sit for a few years and check to see if its value is rising. Buffett believes that you should only begin investing if you are truly knowledgeable about the process, because if you are knowledgeable, you won't make mistakes. To be fair, if you are a truly skilled investor, you will do your research and choose a few companies that have a lot of potential and invest in them. You don't really need a safety net because you have already decided that it makes no sense to invest in a huge number of businesses. Diversifying your portfolio for the purpose of protection is just doubting your own intuition, but if you're diversifying it for the sake of more profits or to expand your investment portfolio, it makes sense. Even when Elon Musk started investing all of his money in SpaceX, he had no safety net or backup plan, but he knew his plan was going to work. Then go ahead and invest in the firm rather than the stock, since, in Warren Buffett's opinion, the latter are merely figures on a screen that can easily trick you. It is therefore preferable to invest in the company rather than relying on a graph that rises and falls. It implies that you must thoroughly research the company you intend to invest in. Once you have a thorough understanding of the company, it will be simpler for you to forecast reasonable profits in the near term. You should also consider the company's long-term viability, or is it really a fleeting cloud, similar to Radio Shack's initial explosion and subsequent disappearance. Buffett once claimed that Berkshire Hathaway's success was a result of his decision to focus on the company's business potential rather than its stock. Berkshire Hathaway became the largest investment company ever because to Warren Buffett's involvement in the company. Improve your abilities. The only way to amass generational wealth like Warren Buffett is to have faith in your own abilities. Warren, the man who essentially controlled the stock market, returned to Omaha and took a public speaking course. Even though Warren Buffett was already a very successful stockbroker at the time, he decided to participate in the Dale Carnegie School to improve his ability to speak in professional settings. Warren now encourages other individuals to follow his example. You can't possibly become a millionaire if you have poor communication skills or no knowledge of the financial market. Instead, pinpoint your biggest weakness and put effort into improving it. To better yourself, you can enroll in classes, go to college, or even attend workshops. What you really need to understand is that if you want to succeed in the long run, you can't just put learning on the back burner. Spending is less than income. If you don't keep an eye on your spending, it's impossible to expect to accumulate generational wealth. It is evident that you need to limit your spending to raise your savings. More money invested will lead to ultimate billionaire status, according to Warren Buffett. Warren is a firm believer in saving as much money as you can and keeping track of every bit. Concentrate on cheap price and good value. In the beginning, Warren Buffett invested in extremely cheap stocks or companies that were about to file for bankruptcy. The majority of investors thought he was an idiot, but he understood that these firms would eventually make him rich. Warren Buffett avoided buying stocks with a value of many thousands of dollars. Even a seasoned investor like Warren began by making a little investment in companies that were extremely inexpensive, and he then waited not for a year or two, but for many decades. When high-value companies are at their lowest points, Warren always maintains a watch on them, makes investments in them, and then repeatedly waits for their prices to rise. Warren has developed into the savvy investor we all know and love. Most people might tell you that taking on debt is preferable to selling your stocks, but this isn't actually true. Warren contends that once you take on debt, you are permanently trapped. According to Warren, the main reason why most investors fail is that they take on debt without fully understanding the repercussions. According to Buffett, if you are destined to become a billionaire, you will do so without the need for bank loans. Due to their high interest rates, Warren Buffett was also particularly antagonistic against credit card businesses. He once stated that he would be bankrupt by now if he ever took out a credit card loan at an interest rate of 18 to 20%. Therefore, it is preferable to avoid taking on any debt at the start of your financial career. Have a long-term plan if you wish to increase money through generations. Even the person who invented the internet didn't realize at first how his concept would take off. Generational riches cannot be generated quickly. So even when you have reservations, make sure you have a long-term, foolproof financial strategy in place. At its height, Warren Buffett opted not to invest in Berkshire Hathaway. Warren invested a significant amount of money in the company even though it was on the verge of bankruptcy because he believed it would turn out to be his golden hand in the following decades. Imagine where you would like to be in 10 years. You can get a better idea of what you're actually doing with your life by giving it some thought. After that, create a long-term strategy and project where your investment portfolio will be in 20 years. Long-term planning will assist you in setting more achievable goals and maintaining the fundamentals. Purchasing an index fund. You don't actually need to invest all of your money in one company and wait for it to make you rich if you are just starting out in the world of investing. Index funds are the safest option for you to invest, and even Warren Buffett urges novice investors to place their money in an index fund so they can invest in a variety of major corporations. You can easily reassess your investment or figure out what you're doing incorrectly if your loss is going out of control. 90% of stock buyers, according to Warren Buffett, don't view their investments appropriately. They consider an item they expect will increase next week and consider the market as an item they hope will increase. If it declines, they get more depressed. I hope it decreases when I buy it so that I can buy more and feel better. I make an effort to preserve my competitive spirit in a game that I can win. I am aware that I always want to make a large impact when I do something. I invested all of my wealth in City Service Preferred. Indeed, March 11, 1942. I've never invested less than 80% of my money in American companies. You can refer to them as stocks, but in my opinion they are American businesses that require the appropriate perspective. What are some of Buffett's pearls of wisdom? If you're not willing to hold a stock for 10 years, don't even think about holding it for 10 minutes, Buffett wrote in a letter to Berkshire Hathaway shareholders in 1996. Another famous quote, part of a 2008 New York Times op-ed, is, "A simple rule dictates my purchase. Be fearful when others are greedy, and be greedy when others are fearful." Buffett is indeed known for his many investment aphorisms, which always come back to the simple rules of value investing. It's important to note that while Warren Buffett's strategies have been highly successful for him, investing always carries risks, and individual results can vary. His success is the result of a combination of his unique skills, temperament, and a lifetime of experience in the financial markets. If you're interested in following his investment principles, it's crucial to do your own research and consider seeking advice from a qualified financial advisor. What do you do with your money when you are the world's most successful investor? Let us know in the comments below, and most importantly, if you wish to be updated on every single topic related to Warren Buffett, you should consider subscribing to the channel and pressing the bell icon. Also, thank you for watching. See you guys in the next one.